Hey folks, Dan Frio here, the rate update. I'm sorry I screamed. That probably anybody coming online is going to be like, holy moly, what did you just do? So we're doing the YouTube live like we do every day to make sure you guys are informed everything real estate, especially the financing piece of the puzzle. Well, in the last 2 days, we've seen rates spike up over, well, it was the two biggest days ever that I've ever seen in my 33-year career. So if you got a mortgage quote previously, you better get a new mortgage quote because your rate, don't be shocked if your rate is 1% higher than what you were quoted previously. So without further ado, I will open up to questions here shortly, but I'm just going to go over with the context of what happened yesterday. There was some news I wish that would have been shared with the public because I think more and more people in Wall Street and other areas, the economy knew these things, and that's why the market kind of plummeted. Or maybe just people were just bailing out, just saying, hey, I'm just going to wait for this to settle down and figure out what's going on from there. So without further ado, Nico, you're drinking, buddy. I hope that's water. Our office, just so you guys know, our office is about 90 degrees right now. It's not common for Chicago to go from 60 to 95 within a 24-hour period. So our building is just gross. Okay, so let's get on to why you're here. So the biggest piece of this puzzle is, here's what's going on with the MBS market right now. Let me go over to this view. And this is what's going on with the MBS market. You guys were on here yesterday and you saw this basically crash. So here's a 2-day event. I've never seen this big a move ever in my lifetime. Let's go to a 5-day. Look at this. It basically fell off the chart. Every time you see a little orange dot there, that basically represents to us that mortgage rates are changing at the investor level. And in all these cases, because the MBSs are driving down, which means rates are going up, they're pushing up rates. So let me put all this into context for you. Guys, here, this is what we focus in on when we're trying to figure out where mortgage rates are and where they're going. This is a mortgage bond that trades on Wall Street. That is the yield on it is the biggest part of your mortgage rate. Okay, so that's that. As this moves down, this chart moves down, mortgage rates go up. And in this morning's video, I explained to everybody how it works. I did a $100 analogy and a $50 analogy. So if you're confused there, please go back to this morning's video. But you can see every one of these orange dots. If I highlight over it, it's going to show you, well, New America got better. But you can see down here, it says nations lending. I don't know if you can see that, got worse. And then FSC got worse. MI Mutual got worse. PennyMac got better. Don't know how that snuck in there. Rocket Mortgage got worse. Change Mortgage got worse. This is what I monitor on a daily basis to figure out what direction tick by tick by tick is happening in the market. Okay, so what happened with this is between Friday and the close of yesterday, mortgage rates went up probably almost 1 full percent. And that's reflective in right here in the mortgage rates. Okay, so the biggest context I want to get out of this for you guys is if you got pre-approved or you talked to a lender previously to Friday, whatever they told you, throw it out with the bathwater. It's no good. Okay, because that rate is no longer available. Even if you talk to somebody yesterday morning, don't be surprised if that rate is 0.5% higher than what you got yesterday morning. So that's the context of where we're getting in. So my daily routine is I come in and I look at the stock market, and right now we're seeing the market right now is down 180 and it's bouncing all over the board. And the only economic news that came out basically Friday was the CPI. Some inflation numbers came in higher than was expected. Okay, and with all that data, the Federal Reserve Chairman was out doing his PR work all through the news channels and stations and everything over the weekend, saying, 50 basis points is what we're going to do, and blah 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 blah. Well, the problem arose is yesterday we got this. Shoot, where'd it go? Right here. This is actually posted today. I bet you somebody had had some insight into this yesterday, because what happened? So let me put it in context. We all thought, investors, lenders, economists, stockbrokers, mortgage brokers, we all thought that the Federal Reserve was going to bump the federal funds rate up 0.5%, already baked into everything. Well, then all of a sudden, yesterday, the market just crashed for some reason. One other inflation number came in, and it was basically exactly where they estimated it to be. So then my thinking is, what's going on? And then yesterday's video that we did live, I said, hey guys, I don't really know what's going on. And several times I said, I don't know. I'm always transparent. If I don't know, I'm not going to guess. Okay, so that's one of the biggest things I want to at least let you guys know. But all of a sudden now, last night, middle of the night, early this morning, we start hearing tricklings that the Federal Reserve might raise rates 75 basis points or 0.75%. So now that puts everybody in a panic mode. Stockbrokers, they have to reevaluate how much a stock is valued at. So because interest rates are going up, that pushes up the cost of everything for the manufacturer. So that's going to drive down his profits, or it's going to drive up the prices. Okay. So how the stock analysts review this is, oh, it's going to deteriorate corporate profits. So stock markets plummet. On the other spectrum of the equation, we now have mortgage rates. It's saying, okay, now rates are going up. We thought going up 0.5%. Now they're going up 0.75%. Oh, sheesh. Now we got to reevaluate all this. So everything kind of hit yesterday, kind of hit everybody on the blind side. So that's what's going on. So now what's the Fed really going to do? So my expectations are this. We had this big of move in the markets, in the MBS markets. Okay, so we see that right here. Complete debacle. All right. So now what happened during this whole time frame is the MBS market, the stock market, everything is trying to readjust or revalue itself based on the new prediction of what the Fed's going to do. So my expectations are what's probably going to happen. The Fed and everybody's speculation always overshoots. So what's probably going to happen tomorrow is we're going to have relief rally, and you're going to see rates come down a little bit and the stock market recover some. Okay, so that's the context behind the scene, how big a role the Federal Reserve plays. They only control the federal funds rate, but they control the psyche, and they control a lot more than that. Because again, when the Federal Reserve raises the federal funds rate, all that it's truly doing is raising the rates from interbank lending. However, all the short-term loans, student or personal loans, car loans, credit cards, all this such is going to be affected by this adjustment in from the Fed. Another thing is tomorrow is going to be the first day where the Fed starts to quantitative tighten. Okay, what that means, they're going to start reducing their balance sheet. So they're going to reduce the amount of bonds, mortgage-backed securities and corporate bonds and treasury bonds that they buy. They're going to reduce the amount that they're buying. That in itself was expected to raise rates. So now we have them quantitative tightening. So that's going to raise rates. We have them now coming out and say the federal funds rate, that they're going to raise that 75 basis points. So that's going to raise rates. So the thought process is, and I'll give you that as we start answering these questions, because we're going to answer questions. So you guys, I'm sure, are going to ask the question, well, what if? Do you think we're going to hit this? What do you think is going to happen in the housing market? Do you think we're going to have a recession? All these things that you probably are sitting there wondering what's happening. So without further ado, Nico is with us today.
What's up, guys?
Nico?
How's everybody?
So he's been swamped, believe it or not. We have a lot of people rushing in at the last minute saying, hey guys, I need to lock in. I've been sitting on the sidelines and I wish I would have heeded your advice, and now I'm locking in. So Nico's been in the background doing all this stuff. So if you see that Nico doesn't talk much, don't yell at me. He's busy behind the scenes, but he came on today just to kind of give some input that he has on all this information and to answer any questions that we have.
Hey, Dan, quick question.
Yeah, go ahead.
So remember when
Turn up your mic a little bit, please. I don't know. Do you have the ability to do that?
Can you hear me a little better?
Yeah, I think if you guys are out there, all I ask you to do is give us a thumbs up, but let me know if you can hear me and Nico okay, if you would, please.
Hello. All right. So what I was thinking is, Dan, because I was with you when COVID first hit, and you remember how big the market moved like that first day? I think it was like 100 points or maybe 94 basis points. So this moved even double of what it did during COVID, but in the reverse factor, right?
So have you ever seen a move like this in your duration of time?
Oh, no.
This 200 basis points in 48 hours.
This is the first time ever for me. Like I said, the only other time that I can really relate is when COVID first hit and rates dropped almost 100 basis points. But that's what I'm saying. This went the reverse way. Rates went up over 200 basis points. So yesterday, I didn't know what to expect walking in.
I walked in. Nico's like, I'm getting sick.
Yeah.
You know, by the time we got in the morning, the MBS market was down like 60 or 80, and it ended up down 160. Okay, so the rates that I posted this morning still didn't have the full effect built into the system. So Nico, if you want to start popping up the questions and we can
sure.
answer anything that's out there. So guys, please ask questions. That's why we do this. But we had between 200 and 300 people live yesterday. I apologize if I didn't get to your questions, but I would love to answer anything that you have today.
Cool. First one's just kind of a comment from Blue Migo. At this rate, interest rates probably will hit 8% by the end of the year. Where are you thinking they're going to be at the end of the year, Dan?
Honestly, they could. I don't think it. We're at 6.5 now. I think with the energy prices, the way they're going, especially oil, the fuel at the pump and everything else, it's going to really curtail spending. So the Federal Reserve, what they're trying to do is they're trying to put a brakes on this robust growth in the economy, which, it's out there. So what they're trying to do is they have two. Let's take it this way. The Federal Reserve has two mandates. One is full employment, and one is price stability, aka inflation. So they got to juggle that mix, and it's hard to say, okay, well, we got to really put a kibosh on everything, or reduce things, or pull them back without really affecting the employment market. Well, I don't know about you guys, but I still don't think the unemployment number is accurate. And the reason being is when you compare that with the JOLT index. What the JOLT index is, and I post that, or I usually try to explain that to people, is how many job openings there are. There's over 11 million job openings, more than ever. Okay, so if we have such a great employment market, why do we have so many job openings? And the first thing that people will say is those are those terrible jobs that don't pay anything or whatever, but they need filled, guys. So if you're not filling those positions, what's going on there? But I don't see rates hitting 8. I thought we'd be at 5.5, where we would kind of peak at maybe 6. Is 8 off the table? No, but I think the Federal Reserve is going to look at this and say, guys, I know we have to act aggressively, but we have to watch, because we can't tank everything as well as employment and basically push the whole country into a very, very bad recession. The expectations now are there'll be some hurting, but the recession should be kind of short-term, short-lived, and so forth, because energy price, oil price. I'll narrow this down basically to two things: oil and the supply chain. If we'll say the war too. So I know you can't just magically fix these things, but as soon as these subside, the inflation number is going to deteriorate quite a bit and very fast. So my concern is the Federal Reserve comes in kind of knee jerks. I wasn't in for this 75 basis point bump, because I was hoping they do 50, 50, and then maybe then at that point, if things still are out of whack, go 75 or 100 just to shock the system and bring it to neutrality as quick as possible. But maybe they're not doing that, but we don't know yet. Are they going to do 75 basis points tomorrow or 50 basis points? Meaning, is the Federal Reserve going to raise rates 1/2 or 3/4 tomorrow? I don't know. So I'd love to be able to answer questions where rates are going to be next, at the end of the year. Unfortunately, I don't even really know where they're going to be tomorrow, because the Federal Reserve is not giving us any indicators. And when they do, they're pretty bad indicators. So
yeah, definitely.
That's my thought. So I'll start tweaking it down so we can answer more and more questions today.
All right, cool. No, again, all good. So from Tommy, stimulus checks and what is the payment loans? What am I thinking of? Oh
yeah. So Tommy, I get what you're saying. Here was my biggest thing with the PPP and all the other stuff was this, and no disrespect to anybody, and I'm transparent. I wear it on my sleeve. There's a lot of people who needed it. God bless you. I'm all for helping people. I was down years ago during the last crash, and I didn't know where to turn. So there are times where people really need help. But there's also, you can't just blanket it with a check to everybody, specifically anybody not making 100 grand gets free money. That's not a good way to do it. You're just throwing money out there, especially with no strings attached. You don't really have to do anything. You don't have to prove that you need it. You don't have to prove that you missed your job. You don't have to prove it. It was like the forbearance thing. You didn't have to prove any hardship to file a forbearance on your mortgage. You just called in and you could not make a payment for up to 18 months. So there was a combination of a lot of things that built into this. You had the Fed making money free, basically. You had the government pumping out money to anybody and everybody, even if you didn't need it, okay? And then you had the forbearance piece and the student loan deferrals that made it that you didn't have to make a mortgage payment for up to 18 months, and you didn't have to make a student loan payment for 2-3 years. So just assuming your situation, if you don't have a rent payment and you don't have a student loan payment, you probably have no bills. So, but you still have money coming in. Now, for those that didn't, they were able to survive, hopefully, the best they could with what they had. But there was a lot of people, and I showed charts yesterday, the net disposable income per household was this highest ever in history. Mm-hmm. Well, how? And that's why we have inflation today.
Cool.
But I agree with you on the PPP and the tax. There had to be some consequences with it or some strings to it. Great question, though.
Cool. So Shia Care, she would like to know, Dan, I think you kind of just answered this without being predictable, is where rates coming down. Like he said, guys, we're a little concerned. We don't know where rates are going to be tomorrow. Again, this market's been super unpredictable. So
because we don't know what the Fed's going to do. They should come out and at least, say, here's what we're, when you come out on a Saturday talk show and you say, well, we're going to do 50 basis points, then we'll reevaluate. And then you come back on Monday and now you have commentators on CNBC and all these big wigs that they have now they're saying, well, yeah, I would pretty much bet that it's going to be 75 basis points. Well, that's one huge curveball you're throwing the markets. And when you throw a huge curveball at the markets, everything's going to freak out. And that's what you saw yesterday. You saw stocks just plummet and you saw mortgage rates spike to the one biggest day move ever.
Definitely. All right. So Mark, for mortgage application side, do you think there are enough qualified applications for today's average home prices? Or do you foresee price reductions to meet buyers' affordability?
That's a great question.
We might have to actually also ask that for our Thursday event as well with our agent.
Yeah, we have. So what we're trying to do on a weekly basis is have realtors join us on basically a real estate roundtable. I'm trying to get a YouTuber influencer thing for this Thursday to have realtor YouTube influencers on the show, as many as we can get. I've already reached out to a bunch of them. So don't be surprised if you come on Thursday night, Thursday, 7 p.m. Central Standard Time live event. We're going to have realtors all over the country answering questions like this. Many times when I'm talking with realtors throughout the country, they're saying a lot of sellers need to kind of get in the game with this because, they're saying, well, the house across the street just sold for $600. Heck, I should be able to get $660 for mine. So they throw it on the market. So is that when they have to now bring that down to $600? Is that a price reduction, or is that just where it should have been priced in the meantime? But this is a hard question. It's like gas. You say with gas, well, can you really afford more gas and whatever? But I see people just managing. A lot of times you just don't want a payment that high. But unfortunately, to buy that house, you're going to have a payment that high. So maybe you don't. You're going to have to start tapering back on your consumer, credit and everything else. But that's a great question. I would like to, confront a realtor on that, saying, what are you guys seeing and what are you hearing on your end? So that was a great question. But on the mortgage application side, we still have people calling in. We had a person call in from New York today saying, hey, I love this house. We told them the rates and we told them everything else. And they're like, I love the house. I'm buying it. So there's still a lot of people out there that they want to buy a house. They want their own house. They don't want to rent. Sure. Nothing against renting.
No. Well, right now, the way the rents are so sky high, maybe there is a little something against renting. But all right, anything less than 75-point hike is going to be a mistake. The market is expecting it. The back and forth clearly isn't working. Market experts, Fed does X, inflation rises over and over again.
I'm going to have to agree with you on that. Now at this point, when you leaked the data, I'll say it that way. The data was leaked. Now, if you don't do it, what's going to happen? Now the Fed's going to lose all credibility, and they've already lost most of it. They can't lose it all at this point. And I would be, very much shocked if they didn't come in with the 75 basis point hit now. But great, thanks for the post, John.
All right. I think more of a little bit, another comment about oil prices. Let's see. How about all the fraud with the PPA loans? Yeah.
Irish, how's it going, buddy? I think you were on here yesterday. So thanks for the pod. I agree. I don't know if you guys watched, it wasn't a documentary, but it was some kind of show talking about the PPP fraud. You're talking billions of dollars in fraud. And where's it going to go? Who knows? Will anybody get hit for it? Who knows? It's just, I hate when the government, they're given a situation and they just go like this. Well, how much is it going to take? It's like you're just bribing, you're just paying off somebody. That's the way I feel on a lot of these. And again, it's election time coming up. Remember that in two cases. In one case, the federal chairman Powell and Joe Biden, they talk. So it's an election year. So they can't really have everything crashing because come November, your vote's going to count. So please go out there and vote. But if everything's crashing, you have $6 gas, you have interest rates at 7, 8, 10%, you have a housing market that's plummeting and a stock market crashing, are you going to continue to vote the same way you're voting? I'm not saying it's not political. I'm just saying you're probably not. So when the government and all the higher up echelons get in here, they're going to look at this stuff and say, we're going to have to do something here, even if we've got to create a smokestack to kind of get through things. So I think you guys know where I'm going with that. All right. But thank you so much, Tommy, for posting.
Awesome, Dan. Thank you. All right. Your guy Irish talks. He paid $4,500 to lock in a 120-day rate at 3.99. Today it would cost him $500 more. Feels bad for anyone that didn't lock in. I'm with you, brother.
Irish. We've been begging and pleading people, and I've been saying this since December. Please, guys, we have an extended lock and a lock-in shop. Please take advantage of these things. It's basically an insurance policy. I'll put it that way. Here's how they work. And if you're new to the channel or you don't know these things, we have two programs right now. I'm a mortgage lender, just so you guys know. We're federally chartered throughout the whole country. My whole team is. So if you're anywhere out there, we'd love to help you.
Sure.
But what this is, and I would still do it today because the post just a little bit ago said, are we going to be at 8% soon? I don't know. And because of that, I don't know, here's what I would do. If you're building a house and you try to get a hold of the builder's lender, if that's who you're working with or whomever, and saying, I got a lock. If they say we can't, then just say, well, I'm out. I'm going to go to another lender because you can't facilitate what I need. Okay. So we have people locking in June that we locked in January. Okay. It was the 6-month extended lock. They're still in the threes. Okay. Because we've been pleading and saying, do these, take advantage of these two programs. What these two programs are is one, if you're building a house, it's called the extended lock. You can lock up to 6 months, basically with no strings attached. Okay. So to lock you in with today's fixed or the 30-year fixed rate on a 60-day lock. And then there's the buffer to the rate added to it. So don't be surprised if we come back and say, hey, your rate's 6.5. Okay. But it's an insurance policy. Let's start there. So it's an insurance policy. Now you got 6.5, probably a pretty bad rate, especially considering 4 or 5 months ago it was 3, but it is what it is. Okay. So what happens is if rates skyrocket, what do you care? You're locked in. Okay. However, the biggest question is, well, by the time it's finished, may we be in a recession? I'm saying yes. And I'm going to probably show you some data here that's going to prove it to you here shortly. So in an average recession, rates usually go down 1 to 1.5%. Okay. So that's what normally happens. So let's say it happens in this case, Irish, and we're 30, 45 days prior to closing and we locked in at 6.5, but the going rate now is 5. We're going to do one of two things. We're either going to have the current lender that we've locked you in, we'll renegotiate that for you to get you the current rate, or we'll just move your loan to a different lender, okay, to make sure we get you the lowest rate we can possibly get you at that time. So you have nothing to lose, okay? The only kind of glitch here is once you go over 6 months, there's a cost. There's skin in the game that you have to pay. It's usually 0.5% or 1 full percent of your loan amount. At that point, we're kind of stuck. So, but that lender, all the lenders we have will also allow a float down if the rate decreases over 0.25%. So let's say we lock in at 6.5 and the going rate by the time we close is 5.875. We'll float you down to the 5.875 and close you. And that fee, it will be moved over to pay any costs or anything else you have. So that's what happens there. So I'm a huge proponent of that. If you're you're shopping right now for a home and you're like, man, I'm getting nervous as heck because I'm shopping and shopping and shopping. I can't find anything. And every day I keep seeing rates are going up, rates going. Well, how about if I can lock you in right now, today, and you can shop? As long as we can get you closed within 90 days, you get today's rate. Okay. That's how the lock-in shop works. So if you need a long-term lock because you're building, please call us. If you're shopping around or you got pre-qualified and you're still looking for a home, but your lender won't lock you in, please call us. We can get you pre-approved within an hour and lock you in today. So now you know this is the highest rate I'm going to get, because what will happen again, if rates go up, we'll get you you're locked in. If rates go down, we'll be able to float you down to the lower rate to make sure you're happy. So that's that.
Awesome.
But thanks for the question.
All right. Eddie Royal, I have friends.
Hey, he's always on here.
Okay, cool. DFW, Texas area. Last year, I got a 2.49 for $500,000 loan, 30-year. Now it's worth $650. Can you get the same house, 3,100 square feet, or will they not be able to afford the home? We're probably going to need a little bit more info.
Yeah, Eddie, I get it. Again, I'm always going to say going back to this. It's the consumer. It's every individual's choice. Again, I just talked with a person in New York, and they're like, I just want the house. I want the house, and they have the funds to do so. So where this is really going to affect people, and you're going to see this from a lot of the realtor groups that we're going to start having on, is the sweet spot's about 350 and below. Okay, that's basically where you could buy a house at that price and have the same payment as you would on rent in most cases. Once you get over that, you get to $1 million homes and so forth. I hate to say it, a lot of those people, they're not as rate sensitive because they got the money. Okay, so we're talking the sweet spot in like exactly where you were. Well, you're in the 650 range. So, but many times it's an individual choice. You might have to pay off your car payment to be able to make the housing affordable and so forth. But the days of just cheap everything is going to be gone for a while, unfortunately. But in your case, Texas is killing it right now. But there's other areas that they're going up in value, but not as extreme to those extents. So in the average market, let's say this, Eddie, a normal market, that house would be valued at about 510, 515, maybe 520 at this point, not 650. So if you bought the house, kudos. If you didn't buy the house and you're still on the sidelines, and those naysayers about home equities and all that, just remember, here's what drives me nuts about all those that post everything every day about the world's going to end. You look up a lot of them, they've been saying it for about 2 years. Well, over the past 2 years, we've seen about a 50 to 60 to 70% increase in real estate values. So I'll come out today and say, okay, the stock market's going to rally 2,000 points. Not going to tell you when, but I'm going to say it every day until it happens. And then I'll say, see, I told you so. So you got to put a lot of this in context. People have been crying wolf for 2 years now, and we still haven't seen housing really take a dump, but 2 years. Okay, so eventually something's going to come true that you predict. Eventually, I think you guys know where I'm going with that. So,
cool. All right, Mark. I agree with you. Sellers pricing too high in his neighborhood in Atlanta, where his homes are averaging around 400 to 450. A seller put their home on the market for 475, and they reduced it down to 460.
Mac, I had Sir Ashley in, and he's down in, well, he's in the Carolinas, but he's in the East Coast, East Corridor. He's saying the same things. I had Jeb Stewart on Smith last week saying the same thing. I have Rick Mahorn was on the other day saying the same thing. I have two new realtors coming on this week. I'm going to ask them that question, but everybody continues to say the sellers are putting their house on the market way high, just anticipation. Hey, I might get it. I'll be transparent. I'll let you guys, if you were on yesterday, I asked my wife, I said, hey, you mind if we put the house on the market for like 200,000-300,000 more than it's worth? And she's like, no, where are we going to go? And I was like, yeah, you got a point there. But that, even me, I was even thinking, well, heck, if I can get $250,000 more than I even think it's worth, I'll probably take it. Rent for a year, figure out what I want to do from there, and then move on. So you get what I'm saying here. I think a lot of the sellers have to put everything into context too. I know everybody thinks their house is better than their neighbors, but it's not always the case on how that works. Okay, but thank you so much for the post, Mac.
All righty, Mark. His buddy lost his lock due to supplies, and his new payment is $800 more.
Mark, this is one of those areas where if you reviewed any contracts, I would say review your buddy's contract that he put on that house. And they're so bad on the building side. And I get it, where they have labor shortages, they have supply chain issues and all this other stuff. But would you be willing to sign a contract saying the house is going to be, we will give, you got to give us up to 2 years to finish the house. And any price increases will flow over to you. And then once we're all said and done, you really don't. And whenever we're finished with the house, you got to close, within 2-3 days, or we're pulling the rug on anything. That is so skewed to the builder that you should say, go in there and say, no, I mean, if you have any price increase, what if prices drop? You never saw in a market when prices were dropping, they come in and say, well, if, in the next year we build this, if prices go down, we'll give you a lower price. That'll never happen. But they're doing it now. So I would highly get an attorney involved, have them review it, make the changes. At this point, I can almost guarantee you the builders are going to say, okay, whatever you need, because they're going to have a huge amount of people backing out of contracts. What repercussions those have, I don't know, because 99% of the people don't have an attorney. So you're just relying on the builder to be, you're working with the builder and against their words or whatever. You need legal counsel because it could be turned into a complete train wreck. So, but that's my analogy on especially building a house.
Cool. I'm just trying to see if this was connected to another comment. What if it's a HELOC 10-year ARM? Let me just scroll through the previous comments.
Sorry, guys, I am sweating my butt off in here. What if it's a HELOC 10-year ARM? Well, just let me while you're looking for other context, if it's in there, HELOCs is a home equity line of credit. So it's like you get I'll say like a credit card on your house. It's a line of credit that you get. It's based on your home value and everything. It's an adjustable rate. It's usually prime plus 1 or 2 or whatever. It's a good safety net to have there if you needed cash at some point, especially maybe $50,000, $60,000, $70,000 in cash. One of the biggest caveats that transpired years ago is they took out the tax deduction ability of home equity loans. You can only write off the interest if it was exclusively used to repair or fix your home. Well, then they had tax revisions and they came out with a standard deduction of $26,000. So most of the people that doesn't affect. When that piece of the puzzle gets kicked out of the tax return things, when they modify the tax codes, that could come into play. So where you want to be careful is that you have a home equity loan, that you're not expecting to write off the interest and everything, but it is good. The rates are good. They're adjustable. I wouldn't throw a ton of money on that thing because the rates are going to adjust. They're adjustable rates, 10-year ARM, and they're gonna fluctuate. The 10-year ARM piece on a home equity loan, just so you guys know, is in 10 years, it's done. You got to pay it off or refinance. It's not like the rate's locked for 10 years. No, it's a 10-year loan. So after 10 years, you have to reapply, pay it off, or do something, sell the house or something. So just informing you guys on the home equity loans. We have them because my team just joined a bank, a federally chartered bank, so we can offer home equity loans, commercial loans, a whole bunch of other things for you, and we'll be posting those updates accordingly. But thank you, Jacqueline, so much for the question.
All right, Blue Migo, oil won't come down unless demand starts to dwindle down, and in the summer it will be difficult for that to happen. What do you think, Dan?
Well, I'll pull out the Russian-Ukraine war because Russia only gives us about 10%, if that, of our oil consumption. What happened was truly in the background, oil prices about a year ago basically hit zero. And do an oil chart. And I remember my son came in and he said, "How can that be?" Basically, there was too much oil that the oil refineries couldn't even store it. So they just wanted to give it away because otherwise they had to just, I don't know how they dispose of it. So again, think of the supply chain in regards to supplies. Okay, so that's basically what the same thing happened in oil. So everybody kept pumping oil, but you got to remember the world shut down, manufacturing shut down. So that means all the equipment, all the trucks, all the this, all the that. No, they needed no fuel. All right. So basically, our consumption really went down. So most of the people that would drill for oil or produce oil, they're like, we can't produce it. There's no reason to produce it because there's nobody willing to buy this. We can't store anymore. So they basically stopped and halted things. And then what happened was you can't just turn on the faucets again. So now when the demand started going, they tried to turn open the spigots, couldn't open it quick enough. And now you have all these supply chain issues and everything hitting that market. So it will correct itself. I think demand right now, and I'll be showing the charts probably in a month or two on how demand for gasoline has plummeted. And I'm sure, I don't know about you guys out there, even in my household, we're like, you guys want to carpool somewhere or whatever else, really cut back on gas because it's basically tripled that piece of our budget on a monthly term. And it's tough. I get it. I too work on a budget.
Cool. All right. Dan, I live in Missouri and I wasn't able to find a house to buy. So I locked my loan at $800,000 at 2.7 for a 10-year arm, 30 years.
Take it. Yeah. Lock it. Don't look back. Sign the dots and move forward. Worry about it 10 years from now, because probably you either won't have the house, you'll refinance by now, or you've paid down the loans substantially enough that if you refinance at that time, even at a 30-year fixed rate, your payment would probably be the same. Yeah. So don't worry about it. God bless you. Lock and load and run with that thing all day long and don't look back. Cool.
Perfect. Dan, this was from Eddie from the comment before about his friend with the home price increase. Just trying to tell him to pull the trigger. He was going to wait for foreclosures, but he told him not to.
God bless you, Eddie, for your services and your friend's services. I truly mean that. We lost my dad about 6 months ago. He was a World War II veteran, believe it or not, 91 years old, 91 years young. We celebrated his life in November, last November. So that was awesome. Eddie, the good piece about the VA, as you well know, it's 100% financing. Usually the rates are pretty darn good. You can easily refinance that at any time because VA has a program that's called it's called VIIRRL, something like that. It's a streamlined IRRRL. You can refinance a VA or an FHA loan really simple. There's no income required, no appraisal required. As long as you meet the credit score and you have no late pays on your mortgage, you can refinance. We used to do tons of those every month. We're doing 0 now because nobody's looking to refinance from 3% rate to 6.5%. But it's the tough thing is looking in the rearview mirror. It's like cryptocurrencies. You wish you could have bought a Bitcoin at $1, and now it's getting killed. But when it was 40, 50, $60 a share, I was like, I hope this thing crashes and whatever. That's not fair. But you get what I'm saying. You can't go back in time. You just got to look to the future. And based on that too, well, let's leave it at that. I've been rambling enough.
All good.
I had Nico on here today, 1 to help, and 2, yesterday I kind of completely lost my trend. We had 250, 300 people on here, and I was losing my place in answering your questions because I try my best to answer everyone I can. So I'm going to start shorten these answers for you.
And you guys can tell he loves mortgages because he'll talk about them all day.
I do love this stuff.
Yeah, I know.
Not with days like we've just had.
Right. So, all right, John, again, local market, San Antonio, has a lot of below market value initial sales prices and increased days on the market, followed by price reduction. Inventory doesn't appear to be as big of a problem. Yes, again, and it's going to be also, because we just spoke to an agent on this, it's going to be very area specific too.
Yeah, and that's why I'm asking for realtors all over the country. Reach out to me. I'd love to have you on here because what's happening in San Antonio is completely different than Austin. So you can't say, oh, there's no houses, there's no affordability. You can't just lay it out on a broad stream blanket. I want to find, I have a young lady from Boise coming on. And believe it or not, Boise was the hottest market 2 years ago. And she's like, it's starting to slow down now, but there's still people buying. She took out people the last 2 days looking to buy homes. So, but again, Boise, Idaho, Boise, where the heck is that?
Yeah.
Versus North Carolina, versus Miami, versus Austin, versus San Antonio. They're different markets, guys. We had Jeb Smith on here last week or the week before. His average client's, $1.2 million house. I mean, I don't have a $2 million house. You probably don't have a $2 million house. So it's different pockets. So you can't just say, oh, the world's ending. So, and I hate that.
And also you got to make sure, like, again, guys, there's a lot of realtors out in this market and all the times. You got to make sure you're working with an agent that's a real estate market expert in that area too, right?
Yeah.
100%.
One of the things I would say is also too, those companies out there that will give you cash, right on the spot, buy your homes and stuff. Please be leery of that. The reason being is they're coming in and saying, okay, we'll buy your house. We'll give you $250,000 right now.
Oh, right.
Okay, fair enough. And you give it to them. Don't be surprised if next day that you see it on the market, on the websites and stuff listed for like $300,000. They're not dumb. A lot of these companies you just saw, I think it was Zillow today, just Zillow and Redfin, somebody like that, just laying off massive amounts of people. But they're not stupid people. They were it's like in this business, it's like feast or famine. Either it's the rates are so low and everybody and their mother's getting a loan or refinancing, or rates, in this point has popped. And now the refinances has dwindled to nothing, and people are struggling to buy houses. So it's usually feast or famine in this business, unfortunately.
All right, Happiness 6767. Hey, Dan, just dropped in. Been looking to buy an OC in California, and I was wondering if I should lock a 5% 30-year rate or hold out to see if the market overreacted. Do you think rates will drop in the next week?
Dude, I don't know where you're getting a 5% 30-year fixed rate, because if you go to, I'm not calling you out. I'm really not calling you out. If you go to here, the average 30-year fixed rate right now, I'll refresh this, according to Mortgage News Daily, 6.28%. Let me go to my website. I just added this on our website yesterday, and it's actually a direct feed from the system that we use.
And Happiness, what I can tell you too, while Dan's pulling that up, is I'll throw my email on here. If you send me your loan estimate, I'll do a personal review for you and send you a video, because there might be some mortgage points cost in there that you don't even know about. So
also let me make this completely clear. If you just took, or you got a quote prior to last Friday, that quote is out the window. Expect the rate to be probably in the range of 0.75 or 1 full percent higher than where they were last Thursday. So if you got a quote, like I said, Happiness, if you got 5%, again, I don't know where you got 5%, if it's a 30-year fixed. But if you go across this board, and let me go back here again. This is the sheet that I just posted on the website, or on our website. I had a widget connected. The 30-year fixed rate right now is 5.9. The jumbo is 5.25. So you might have a jumbo. Yeah, you might have a jumbo. Okay, so that might be in tune. But look at the disparities between this one and Mortgage News Daily. So we got the 30-year fixed at 5.9, got the 30-year fixed here at 6.28. So even on the low end of the spectrum, the rates that I have posted on my website right now, that's a link. Again, it's a direct link from the system that we use, showing 5.49, and maybe if it's a jumbo, 5.27. So send us your loan estimate. We'd love to review it and get back with you and say you did good, or you better go back and get an updated quote, because what they're giving you isn't correct or isn't updated.
Cool.
Thank you though for posting.
All right. Pakala, I'm not going to even try. With a 7-1 arm or a 10-1 arm, once the fixed rate ends at 7 or 10 year mark, are you able to refinance to get out of the fluctuating arm rate?
Yeah, you can refinance at any time. So let's say you close on a 7-year arm now, and rates plummet, Q1 of 2023, and the rate, your arm rate is, let's go with today's arm rates looking like, where is it? Not even showing on this thing. Here, let's go back to the Mortgage News Daily. Arm rate's showing 5.5%. So let's say you locked in at 5.5%, but come January this year, rates go down to 4.5%, refinance. But I'm also a proponent, don't spend a lot of money. You're buying a house. I wouldn't use thousands and thousands and thousands to buy down the rate, because I'm pretty confident that we're going to hit a recession at the end of this month. And it'll be factored in probably Q4 of this year. And I'll expedite on that a little bit. I'll expand on that in just a little bit.
Dan, I really like this question. I know you'll like to explain this one for sure. You say rates on Mortgage News Daily aren't necessarily the rates I can get. Is my rate likely to be higher or lower? What's besides my credit score determines my interest rate?
Perfect question, Dave. So here's what happens is, I say these in my videos. What I want everybody to kind of watch is this change. Okay, the change right here. Let me see if on our website it shows you that. Okay, yep. So right here. So let's say in this case, Let's throw the rate out the window right now. All right. I want you to watch this number right here. What's the change since yesterday? For example, it's like the Dow Jones. If you own 30 stocks, you probably don't check every day and check you might. It's so simple anymore. But you usually look at the Dow and say, oh, geez, the market's down 900. And in your head, you automatically know your stocks are down. Okay. So what I try to do on a daily basis is to say, okay, here's where rates are. Here's the change. So for example, if you got a quote yesterday, well, if you didn't lock in, your rate is probably, and I'm scratch the rate. Let's blank this piece out. Your rate is probably 0.25%. So right here, 0.28. It's probably 0.25% higher than what it was yesterday, the quote you got. So I don't want you to really pay some attention to the rate, but there's a lot of factors that go into the rate. Credit, LTV. Okay, the biggest piece of this equation, and this is right on my website. You can go down and scroll down to the bottom, and it gives you rates and then credit and LTV, FICO scores. And these are the buckets I was talking about yesterday. Remember I said, if you were on here, I said, people were talking about, 740 credit score, 760, 720. Here's the buckets that I spoke about. I said they're going 20 point increments. 740, you're peaked out. You done well. You can't get a better rate. And that's represented right in here. Okay. Then it goes 720. If you have a 720 credit score, your rate's going to be worse than the 740. No matter everything else being the same, other than that, you're still going to have a worse rate. And it goes down accordingly. Then the next biggest piece of this puzzle is what we call the loan to value. Your loan amount divided by the value of the property. That's your loan to value. The lower that is, the better your rate. Okay. So the higher your credit is and the more money you put down when you're buying, the better the rate, to the point where it's like, I don't have any more money. You know what I mean? So that's one of those things we'll help you with, because a lot of times people say, instead of putting down 5%, I want to put down 10% so I can save a ton of money. Well, you believe it or not, putting an extra 5% down really probably isn't going to save you much money at all. So we'll do all the numbers for you and come back to you and say, it'll increase by you doing that. It'll decrease your monthly payment by $12 a month. Do you want to spend that much money to get a $12 a month reduction in your payment? You're just buying a house. Remember, you're probably going to need new curtains, new dishes, new towels, new blah, blah, blah. That money could be allocated somewhere else. But again, it's for you to decide. But credit score, the amount of money down, those are the two biggest factors when it comes to your credit scores. Look at this. Let's go to a trend here. That's the trend of where mortgage rates are going right now. And we'll get a 30-day trend. That doesn't look so bad. 100-day gets bad. And then when you get a 1-year trend, basically rates across the board have doubled in the last 6 months.
Yeah. Crazy.
All right, keep going, buddy.
All right, Fan, the rate is 6.28 now. Do you think an accelerator of increasing inventory will slow down because no one will sell their homes who has less than 3% to 4% rate?
That's my question too. And that's why I'm having realtors come on here. I'm like, what is in the psyche of your clients? So why I want realtors on here, and I'm going to try to, Nico and I are working on a platform right now, Real Estate Roundtable. It'll be realtor exclusive on Wednesdays. These are the questions I want to ask. What are you hearing from the buyers? A lot of times they'll the buyers will start kicking the tires before they really, get involved in the financing piece of things. Nothing wrong with that. But, don't go looking at Lamborghinis when you can't afford a Lamborghini. You get what I'm saying? So make sure you qualify for what you're looking for. But that's my sentiment exactly. I'm like, in my situation, I have 2.5% on a 30-year fixed. Would I sell that house just to move, whatever? But it's again, it's a personal preference. If I had to move, so my job transferred me to Texas, I'd have to move. I'd have to sell my house, and then it's me to decide if I want to do something at that time. But that's the biggest question I have for realtors: is what's in the psyche of home owners right now? Not only the buyers, but in the homeowners. That's a great question.
All righty. Mark, his subdivision was selling $429 2 years ago and is now at $850, same square foot and 3% higher interest rate. Where are you at, bud? Mark, where's your house?
Wow. That's nuts. So I'll go out on a limb. Will Mark's area get hit on a correction in the market? Probably. Because that's it basically doubled in 2 years. That's nuts. Unless it was a little town that just blew up or whatever. But I mean, that's absurd. So in those markets, will they come down? They probably should, but they might not. Again, it's the supply demand thing. So you guys are stumping me a little bit today. I don't have some of these answers, but I have no problem saying, I don't know.
No, that's good. All right, Pavan, by increasing the interest rate, it looks like we are stopping the real home buyers from buying, and investors with money is buying. I assume we should do something which helps individuals rather.
I hate to say it this way, and you guys are probably not going to like this answer, but in a free market, you have the ability to buy just as well as the investor has the ability to buy. Let's say, for example, Pavan, you're selling your house, and somebody comes in and offers you're selling it for $400,000, and somebody comes in and offers you $450,000. Do you care? I hate to say it this way, but do you care it's an investor or a consumer? Okay, so that's where we can't always look at it in the shoes that you're looking in. Sometimes flip it around and say, well, you're on the other side of the equation. If somebody's willing to give me that much money for my house, I truly don't care who it is. I'll take the money and move on. So that, please try to look at it in their point of view. How would you go into the market and say, well, if you're an investor, you can't buy any houses here now, because it's a free market. And unless state and local governments get involved, which I don't know how they would, that I don't see that going anywhere. I can appreciate everybody's frustrations, but the other question you got to ask yourself is, why are these investors still buying? Okay, why are they still buying? Well, I can tell you why. They can get a good ROI on their investment, probably 15 to 20%, because they buy for cash, and then they do go out and get financing for that puzzle because they only have ample amount of cash, and then they raise rents. The average rent last year went up 18, 20%. Why? Because they can. So they're going to start pricing you out of the market. So do you act now or do you wait? So again, I don't know the answer to that question.
Cool. Thank you, Dan. All right. Dan, Redfin has posted on the SEC about the layoffs. He stated could be years, not months, for slower home sales.
Okay, so what I'm going to say here, hey buddy, how you doing? He lives down in Florida. Cool. I get what you're saying, and I do read every one of your posts every day, and I love them, buddy. So let's take that same analogy. So last year, about this time, the Federal Reserve came out and said we will not be raising rates until at least 2023.
Yeah.
6 months later, they're like, oh boy, we got to start raising rates. 6 months later, now they're like, hey, whoa, we're way behind the 8 ball. Now we even got to jack rates higher than we needed to. So if Federal Chairman Powell didn't know a year ago what the future held, Redfin doesn't either. So we're taking this market day by day by day. I've never been on the edge of my seat on a daily basis to figure out, is Federal Chairman Powell going to sneeze or cough? And what ripple effect is that going to have through the market? But I get your point. But again, they're making massive layoffs because the housing market is not in a good space right now. So if you're still looking to buy, I still say keep looking. You might find an opportunity out there. Here's what I'll just tell you. When I need a car, this is a perfect example. I don't wait until I absolutely have to have a car to look for a car, because then they got you. I start looking before I have to really need a car. So if a sweet deal comes up, I buy it and I move on because I needed the car anyways. I think a lot of people just wait till the last minute, maybe not, that they're like, okay, my rent's, can I have people all the time saying, hey, my rent or my lease agreement's up at the end of June. I really need a house. And I'm like, well, did you realize it's June 10th? That's a bad position to be in. Don't put yourself nor your family in that position. So keep looking. There might be something that comes about, or you might find a rental property that's fantastic. Reach out to a great realtor who's full-time, knows the business, knows the analytics, knows everything about your market. Work with them because they have your best intentions in mind. I can guarantee that.
Awesome. So this is from Happiness, Dan, about the 5% rate. It was a jumbo loan with 40% down. They quoted him 5 1/8 today, but he's trying to gauge if he should wait till next week. Again,
hopefully the that estimate or that quote came from. If not, I need that quote that you're getting. Okay. So the first thing is, here's my expectations. Let's go over to what's going on in the MBS market right now. We'll pull that up. I like it when Nico and I are on the side. So this is what's going on in the MBS market right now. It's down 11. Okay. So tomorrow when the Federal Reserve comes out and they tell us exactly what they're going to do. Okay. They're probably going to move 75 basis points and the market's going to go, whew. But we're going to watch every word they say, because if there's any skewing in that of saying, hey, next meeting might be 75 or 100, the markets are going to continue to react like they're reacting now because the market isn't priced for it. Okay. The market was priced and it had built into it 50 basis points, 0.5% increase from the Federal Reserve. When we now hear rumblings yesterday saying, oh, it's probably going to be 75, you saw what happened. Okay. Let's say now tomorrow they come out and say we did 75 and the market's saying, okay, we expect that. We priced it in already. But going forward, we're going to do 75 or 100. The market's going to knee jerk again and have to reprice that all back in the markets. So you're going to see a debacle. My expectations are they're going to come in and say we're going to do 75%, 75 basis points, and then we're going to reevaluate things. But we're still looking at 50 basis points or 75 basis points going forward. If they come out with that guidance or at least some specifics, then the markets are going to be relieved. But what they're probably going to do is give themselves ample room. And it's also going to keep continuing confusion in the markets. They're going to say, well, we're going to monitor things. And I get what they're saying. Every day something else pops up. But they're going to say, we're going to continue to evaluate things. So the bad news there is when I go over the economic calendar with everybody every day, those are the things they're looking at. I filter that calendar down from like 100 different things going to happen in that day to like 4. Because it's the 4 main things the Fed's looking at. That's all I care about. So those are the things we'll have to continue to watch on a daily basis. And the daily basis, the volatility in all the markets is just going to continue to go like this. So we need the Fed to step up and say, okay, here's our plan. Here's our plan. We're going to stick to it for at least 1 or 2 meetings, and then we'll reevaluate. You can't reevaluate every other day.
Cool.
Sorry, I know I'm rambling.
No, you're good. So it looks like we have a realtor on here. Sell next
day. Please email us. Email Nico. We need to get your information to get you on a show or at least talk to you. We get your information on boots on the ground. So I'd love to hear from you. Love for you to join us on Wednesdays. Starting next week, it'll be real estate roundtables for realtors only. Well, I'm not going to lock you out, but I'm hoping to get these realtors on there.
But yeah, they were saying that a lot of fix and flippers have paused right now.
Absolutely.
Kind of waiting it out.
They're screwed. They're screwed. I mean, there's probably got people out there that never did that. I'll give you I've been doing this for, you guys know how long I've been doing this. 10 years ago when the market crashed, I had 6 properties I was fixing and flipping. I lost my ass. Okay. And I've been in the business. I know people in construction. I know this. I got the houses at good deals and everything. I lost my ass. Okay, for these that go in and jump in and they're like, oh, I'm fixing, flipping, and I'm doing all this stuff. If you really don't know what you're doing, you're not in the construction business, you don't have the real estate background, you don't have this, you don't have that, and you're holding on to big inventory right now, you're in a bad situation unless you have huge amounts of equity in that house or you plan on renting them.
Cool. So Mark, buying at 2%, 3% versus the 6 or 7 now, buyers are going to be back to apartment living and be engaged.
I wouldn't say that. Let's go back to you're probably right. You're most likely right. But let's go back to the apartments. How much has your area increased in rents? For example, I had Sir Ashley on the channel about 3 weeks ago. He's saying still down in the Carolina areas, you can still buy cheaper than you can rent. So again, Mark, what I'm trying to explain, and I get your point. I love the interaction. I love you posting. I love you coming on here. But a lot of times it's hard to just blanket statement. Again, a lot of those big YouTubers out there that are pumping Armageddon, just watch this. Go watch every one of their video. Their whole channel revolves around what happened in 2008. They don't talk about all the other time periods when we had recessions and things like that. Everything revolves around 2008. Well, until you're really educated in 2008, you can't really use that as a good comparison because it's not a comparison. The events that took place that created that one, and the ones that created this one, is completely 100% different. Okay. So that's why our goal here, and here's my tagline, to educate and inform you guys everything real estate, especially when it comes to the financing. I had to say my tagline. Sorry.
All righty. Cool.
But yeah,
go ahead.
I get it. Those rates going up, it's gonna hurt.
Yeah. So the most of the stuff are just kind of rest are not questions.
Go guys.
Yeah,
that was an hour. So this was my event yesterday. Lasted about 2.5 hours, and we had like 200-300 people on here. So if you have any more questions, please post them. Let's go over and see while you guys are thinking about something to post. Let's go over and see what's going on in the MBS market. It is flat down 11. Let's see if Mortgage News Daily has reposted their rate sheets for today. Yes, we are still down 11 there, 6.28 there, up 10 basis points, still at 6.28. Economic calendar, nothing there. Anything refreshed today? No. PPI came in line. That is it on all those fronts. So that might do it. Nico, anything else down there?
From
yes,
Sell Next Day, energy prices are IMO, a lead lending indicator. What are your thoughts? Energy prices are IMO, the leading indicator?
In my opinion, are leading. I agree. In this market, I absolutely 100% agree. It's in my opinion. So
I've never seen that before. I'm sorry.
No, that's okay. In the economic calendar, if you guys see here, I always add in or include crude oil inventories. And I say it. It probably whips right past your head if you ever watch me. You're like, okay, the oil's up. There's oil inventory, whatever. That's why I do it. Because why? Think of, how much you're paying at the pump. Well, let's just take this water bottle. All right. How did this water bottle get manufactured? There's oil in this water bottle, but when they extract all this stuff, they have to use machines that run by oil, gas, diesel. Okay. When they extract this from the ground, they have to take it somewhere. How do they do that? They truck it by diesel. You get my point? Everything is going by diesel. So the one big indicator that I watch is fuel, oil, because if oil is skyrocketing, even the raw materials in this thing is going to go up. Not only is it going to use raw material or energy or oil or fuel to get this from the manufacturer to the store, and then you go to the store in your car run by gas, or unless you have a Tesla, and then you get my point. So I highly monitor oil prices, as you can see right here in proof of my calendar. And I just didn't add it today. I add it every day to let you guys know what's going on every time oil inventory is posted.
All right, cool, Dan. Thank you. We got a couple more coming in. Mark, our friend Mark, just saying, who the heck's going to be paying points at almost 7%?
Dude, I get it. But what they're trying to do is they're trying to get that 7 to 5 or 6 or whatever. They're trying to drive it down. But, again, let's say, for example, let's do it two ways. The first thing I'd like to analyze is, here's your rate. Okay. How much does it cost to buy it down, and how much is your savings? So in essence, what is your break-even point? So if you spend $5,000, $6,000, $10,000, okay, to get a lower rate, and it reduce your payment by $100, okay, it's going to take you 100 payments to break even, right? So it's going to take you a long time to break even. Well, during that time frame, will rates go down? Don't know. Will you sell the house? Will you refinance? What will happen? I don't know. But if that break even is so far out there, you get my point. So I wouldn't spend a lot of money today, because I still think the recession. Now, let me get to just some economic numbers for you guys, just to show you what I'm looking at. Okay. A recession in this definition is 2 consecutive quarters of negative GDP, right? Well, here's the GDP that we had. This one was in March. So the end of March, Q1 of 2022, because a Q1 is January, February, March. The end of March, real GDP was minus 1.5. All right. We are now in the middle of June. So the end of the next quarter is in about 2-3 weeks. I can guarantee you we're going to have negative GDP. So that means we had 1, we had 2, we're officially in a recession. Right. So what's going to happen is you won't hear the people be like, well, we're still analyzing it. We're doing this. What are you analyzing? We're in a recession. Okay. So now it's going to wait for mainstream media and everybody else to catch up to things, but it'll eventually catch up. The economy is going to slow down. People are going to start freaking out. Look at the consumer confidence right here. Consumer confidence previously went from 58 to 50. I did a video just a couple weeks ago, and I'm like, I have no clue how consumer confidence is up as high as it is. It's not crashing because things are bad. All right. So now we're starting to see that reflect in the system.
Cool. All right, Dennis. He's from Los Angeles. Should I start lowballing offers 10 to 20% lower?
Sure. Good luck.
Yeah.
What do you have to lose? I don't know if I would, if I put my house on the market, somebody came in 20% lower. I don't know, but you might start at what you feel comfortable. This is where your realtor comes into play. Okay. So your realtor should be able to do what's called a BPM, BPO, borrower price opinion. It's basically an appraisal on your house to say, what's it worth? Okay. This is the value that your realtor gives you. With the data that they have, they should be able to say, okay, here's what the house is worth. All right. This is what we'd be willing to pay. So that number might be 20% lower than what they currently have it on. But I would use their data in your gut, but don't go in there and saying, oh, it's worth it's 500,000. Man, I get this for 400,000. You might not even get a response. But get an educated person who does this for a living to help you with that transaction. Guys, when you're a buyer in a transaction, it doesn't cost you anything, zero, zippo, to use a realtor. The seller is paying the realtor's commission. And don't use the realtor who has the house on the market, because their fiduciary responsibility is to the seller, not to you, because they're trying to sell at the highest price because they've already contracted with the seller to sell the house. So you need to get somebody really good that's educated, that knows their business and knows your market to help you make an educated decision when buying a house.
Awesome. David Henderson, thanks for showing us your rate sheet. It looks like you are currently about a quarter point lower than Mortgage News Daily for a 30-year fix. Is this typical?
Dave, I don't know. And this was my confusion, because I use Mortgage News Daily and I've had for years, mainly because it's a great format. I mean, look at the format. It's pretty simple to read. You got this, you got, this, the charts, the trend of the day, all this stuff. If you just look at this one time, you're like, okay, that's just a bunch of mumble jumble. Well, I watch this every day, all day, so I can give you insights into this. So my concern was, we use a system called Loan Sifter. Loan Sifter enables me, or gives me the ability to scan the lenders all over the country. Okay, that's the service we provide for you. When you apply with us, we're not just the bank. We also, our job as mortgage advisors, is to go all over the country to help you find that best rate, the best program, what fits your needs. Okay, so we use a system called Loan Sifter you don't have access to. And that data comes in, where's my website? Right here. That I created, or I got a widget from that system and I linked it over to this. So that was my concern. It's like, so when I'm doing my videos, what do I use? So basically, again, what I want to explain to you guys is, on this, don't really pay attention to that rate in great context. But your concern would be, well, then why do you even post it? Again, what I'm trying to do is educate you on the direction things are taking. This example, I was trying to look yesterday. Me and Nico were looking, saying, what is that rate reflective of? What's the credit score? What's the loan to value? How much money did they put down? Where are they living? What kind of property is it? It doesn't tell me anywhere. So this might be a 50% loan to value. They put 50% down. They have an 800 credit score, whatever else, in creating this rate versus this rate. Right. I don't know. And that I'm digging into that. I get it. And I'm trying to help so I can inform you guys what's going on. But if you look at the adjustments, let's look at the adjustments. And guys, we're doing this live. So the adjustment right now is up 0.282. So we go over here. The adjustment was up 0.10. I don't know. So I promise you I'll dig into that and I'll get answers, because I want to make sure you guys are informed of all this and you really know what's going on. I'm not trying to trick you. I'm just trying to use the data I have available to me.
Cool. Yeah, that's pretty much it. I guess this is for the lowballing offers in Cali. Should he wait a month or two until the sold data numbers are lower?
No, go now. Get a realtor, have them do all the numbers. They have live numbers. So just so you guys know, me and you, I have the numbers that are posted of wherever, all over the Google or websites. You're a realtor. The realtors out there have, like, somebody on here was a realtor. They have the MLS. It is live data. They can check every day how many houses went on the market that week, how many sold, what the days on the market is, how many price adjustments there were, all kind of stuff. We need to get you a realtor. I can't stress that high enough. And if you're a realtor out there, please reach out to us. We need your boots on the ground to give us the data that we are looking for and our clients are looking for to make sure they make an educated decision.
Cool. This is from Mark Dan. Can you show us a rate sheet if someone pays 0.5 or a quarter points for a 15-year rate? Again, it's gonna.
I don't have I'd love to, Mark, if I could. There's no rate sheet. If I pulled up a rate sheet, it's like 7-8 pages long. So I don't have a rate sheet for you. But if you want that specific, we can nail it to the penny for you. Just email Nico. His information is down below. He can have that run for you within 15. Give him within an hour. He'll have it right back to you. The market is stabilized. Well, it's down 16 now, right here. So it's down 16. But it hasn't really moved most of the day. Let's just go to the one-day chart. It's basically stagnant right now. So we opened kind of here and we're here. So there's no big difference. So just email him your criteria, your credit score, the loan amount, your down payment, and stuff like that. He'll get right back with you with a customized quote. Yeah. So guys, anybody that's new to this, here's our website. It's therateupdate.com. Gives you all the programs we have to offer. Gives you our phone number. You can apply online. You can schedule a meeting. We even have a chat bot right down below that it's me, Nico, or Alan on there at all times.
Yeah,
so if you see any of us and you don't want to really chat, just say hi. So if you guys are out there, if you haven't yet, please don't forget to give us a thumbs up. It just helps the algorithms, help us get noticed more. And we love your feedback. We love you guys taking time out of your day to join us.
John C. looks like as a realtor, we have a MLS live data. The CMAs change from month to month on average. That's the system we're talking about.
Yep. So and John, please reach out to us. Why? You might be able to find some consumers here or some buyers here or some sellers here that need your help. They might be in an area they're like, okay, I'm lost. Some of these people that might have been posted might be right in your neighborhood that you can help them out. So that's why we're reaching out to realtors, specific realtors. Reach out to us. Give us your data. If you don't want to participate in anything else, that's fine. Give us your data so we can lease. If we have somebody in your area, especially on here, that asks a question, they say, hey, I'm in such and such. We'd be like, hey, wait a second. John's in that area. Let's send it to John. Hey, Sir Ashley's in that area. Rick Mahorn's in that area. Jeb Smith is in that area. We'd love to be able to send these clients over to you guys. And so we know they're being taken care of.
Cool. Yeah, that's it for right now. One other comment, check CNBC high alerts. Press 3 times since I do. Another one from John C., the agent. I had a seller increase their price 3 times since February due to market increases.
So if they're increasing 3 times, let me go out on a limb and ask, why isn't it selling? If it's not selling, you would think you'd go the other way. Just saying. So cool. I don't know the specifics behind that, John, but it's crazy how the seller wants, if it's not selling as is, why do you think by increasing the price, it would be better off to sell? Doesn't make any sense.
Hey, so we live in wild times, Dan.
Yep. Okay, guys, we've been on here for an hour. That was the goal. And if we answered your questions, thank you so much for coming on board. If we didn't, please email me or Nico. I'll put my information down below as well. I don't want to, we'll just send it to Nico. He's here all day, every day. I'm right in the office is 2 down from him. So we are tag teamed here. So we'd love to help you. So guys, God bless. Thank you so much for watching today. We will be back tomorrow. I got a live event right after the Federal Reserve announces what they're going to do, and then the reaction that's taking place live as they're doing it. So thanks for joining us. Please come back again tomorrow. This is a action-packed week, and then next week we'll take a little hiatus to catch our breaths and get caught up with things. So thanks again for watching, guys. God bless you. And if you